heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, full coverage of tech earnings, of course. We break down Meta's results and push ahead to Amazon's after the bell.
Plus, we'll bring you our interview with the CEO of Activision Blizzard as the UK halts the $69 billion gaming deal.
And in today's Venture Capital Spotlight, we speak with Keith Raboy of Founders Fund to discuss investment opportunities outside of Silicon Valley. All that, so much more coming up, including from private to public markets. Once again, second straight day of gains on the Nasdaq, really leading the charge. It seems to be anxiety leaving us when it comes to tech earnings. But still, there's some worry out there about the overall US economy, the growth slowing in the first quarter more than expected, and that inflation risk still clear and evident as consumers are still spending. We're up 1.7% on the Nasdaq, but two-year yields just pushing higher by 11 basis points. This as we see that inflationary pressure just remaining resilient. All country world index, I want to shine a light that actually Asia did relatively well. They responded. China just moving a little bit higher. We also saw European stocks on the upside, bouncing back after a big sell-off yesterday. So moving on and look at what other risk asset is, well, proving volatile once again. Check out the moves on Bitcoin in the last couple of days. We spiraled higher above 30,000, then dove back down. Everyone's scratching their heads as to why. Thin liquidity seems to be the key issue of the day, but we are back up more than 5%. We're at nearly 29, almost 30,000 level once again, Ed. But go micro for a moment.
Yeah, I think you're right that earnings is a big driver in this market, but we've had a lot of headlines in the world of technology. So Dropbox off by 2.2%, cutting 16% of its global headcount. We'll bring you those details later in the show. Mobileye, the automotive tech chip maker, down by 24%. Biggest drop since it went public last year, cutting the full year forecast. Worrying signs about demand on the ADAS side. Amazon ahead of earnings. We're going to get into that preview later in the program, but I think there's a bit of buoyancy from what we've heard from other tech companies, Microsoft, Alphabet, and Meta last night, up 4% ahead of earnings, and then Comcast also showing strength on broadband and weakness in television. But investors like what they see, up 8%. There is one story, which is Meta. I'm just going to bring you the numbers. So 2Q outlook for revenue, $29.5 to $32 billion. Even at the low end of that range, it was above consensus. Then you have the pivot. 6 minutes spent talking on AI by Mark Zuckerberg. 30 seconds talking about the metaverse. Cost efficiency, cost efficiency, cost efficiency, and at the same time they're investing in infrastructure. So much to pass, but I think the big picture is the bread and butter ad business is doing well, and they're committed to being a leader in that space, Caro.
That was so notable, wasn't it? The length of time, the short duration they focused on the metaverse, the long duration they focused on AI and generative AI therein. Let's talk about the stock pop. Let's talk about, well, the business Meta a little bit more. Deborah Aho-Williamson is Insider Intelligence Principal Analyst. And I'm pleased to say, in the studio in New York, welcome. Tell us a little bit about what you made of, yes, a bounce back in advertising. Is that going to be proved resilient, though?
It's a really good question. So I think what we're seeing right now is a lot of rejoicing over what's been a pretty small growth in ad revenue year over year. We are not in the era, and we probably will never, ever again be in the era of double-digit ad revenue gains. So I think investors are really looking at, flat is good, single-digit growth is a sign for rejoicing. I think, honestly, Meta is showing some signs of coming out of the woods. I think their Q2 guidance is also pretty strong, and if they can meet the top end of that guidance, that's going to give them their first double-digit growth in quarterly revenue since late 2020. So, overall, potentially positive.
Quite a bitter pill to be swallowing if you're still waiting to hear whether you're going to lose your job or not. How do you think morale is going to be affecting productivity right now?
There is a problem with that, right? And I think that the larger effect as well, in addition to the many thousands of jobs that are being cut, which is very terrible news for Meta, the larger picture is that I think this is also potentially damaging some of the innovative spirit that we've seen at Meta over the years. This is the company that basically, if it didn't invent social networking and social media, it really popularized it, and it built so many amazing features. The work in the metaverse, the work in AI. I mean, there's a lot that Meta wants to accomplish. But with morale being low and people worried about layoffs, it's very hard, I think, to get that enthusiasm going, and that's what I worry about.
You look at the stock reaction, biggest jump since early Feb, stock at its highest level since Feb 2022. But there are investors out there, Caroline, that are questioning why. Have a listen to what one investor told us earlier today.
I certainly was surprised at Meta's earnings. I did not expect them to have growth in users. I did not expect to see the positive news coming out of ads. And I would expect that a lot of those efficiencies that people heard, that had already been priced in as well. So I'm a little surprised at the gain that we've seen.
Victoria Fernandez there at Crossmark, Deborah. What was so interesting is Susan Lee's role in all of this, how she emphasized efficiency, but they're also lapping what were softer comps last year. Remember what was happening a year ago, the war in Ukraine. So how do we discern the health of the ad business at its core?
Yes, so I think there's a few really strong indicators to look at. The first one is during the earnings call yesterday, Susan talked about growth from e-commerce advertisers, and particularly China-based e-commerce advertisers who are looking to reach consumers outside of China. We haven't heard Meta talk about these types of advertisers, e-commerce advertisers, so positively in the past few quarters. So I think that's a really good sign. Another thing that we're looking at is a certain type of advertising program that Meta offers called Advantage Plus. Advantage Plus is really aimed at helping the bottom line for advertisers. That's really done very well. So as we see that take off, those are going to present some positive signs as well.
I don't know what you had on your bingo card for last night's earnings call, but artificial intelligence was on everyone else's. And it was so interesting to hear CFO Susan Lee, quite new to the role, but she wasn't just in command of the numbers. She really was giving some fighting talk on this AI strategy.
Absolutely. And Mark Zuckerberg talked quite extensively about AI as well. And he made a strong point that, and as a matter of fact, he's trying to correct a perception that Meta is not moving away from the metaverse. It's actually pursuing the metaverse as well as artificial intelligence at the same time. And he believes strongly, and in my opinion, this could maybe be a change in message, but he said he believes strongly that there are many ways that AI and the metaverse can come together over time. I think my position is that AI is certainly something that Meta needs to be involved in, whether it's generative AI, predictive AI, or any other form of AI. It's the buzzword of the moment. The metaverse, they're continuing to invest. It's really hard to know exactly where and when that's going to pay off for the company. But I mean, we've heard enough times from Mark Zuckerberg over the past few quarters that they are committed to it. I think investors in the market just need to accept that and then focus on the rest of Meta's business for more signs of growth.
Caroline, Bloomberg's Alex Barinka wrote in the Top Live blog that this was a sassy Mark Zuckerberg. He had a lot to say about things, but made a very clear point on misinterpretation of strategy.
Sassy, but does measurement tell us the real story? I'm looking at 6 minutes that he discussed generative AI in his opening, and 90 seconds that he discussed the metaverse. For me, Deborah, that speaks volumes, but I'm interested in what you make of the overall loss, the investment that they make in the metaverse at the moment, and how long investors are going to give them a leash on that.
It's an incredibly large amount of money. I mean, $4 billion just in this past quarter alone, something over $13 billion last year. Yeah, I mean, this is definitely something that should be weighing on the minds of investors. But at the end of the day, this is an advertising-supported business. This is a company where the vast majority of their revenue does come from advertising, and so I think we need to pay attention to what's going on in the advertising model and where they're making gains. So far this quarter, last quarter looked pretty good. Signs are perhaps next quarter will look good as well.
Yes.
But this is a long year of efficiency, that Mark Zuckerberg is talking about. And we have a lot ahead of us.
Well, we point out that expenses as a forecast, so I think it was lowered from 92 billion to 90 billion for full year 23. So it gives you a sense of direction. Deborah Aho Williamson of Insider Intelligence, thank you. The other big name reporting after the bell, Amazon, reporting earnings, this big beast. It's winding down some areas in health, but actually, let's bring in Bloomberg's Matt Day out of Seattle, because I think, Matt, there is one key area of focus, and that is the cloud.
That's right. The cloud used to be Amazon's sure thing. Some years it accounted for all of Amazon's operating income. That sure thing is definitely gone at this point in terms of their sales growth. It's been slowing to record lows since Amazon began breaking out the figure back in 2014. And investors are really looking for when that bottoms out. Is that going to be something later this year? Is Amazon Web Services sales growth going to hit single digits? You really can't overestimate the importance of the cloud for Amazon, and it's really slowing down.
And notably, they've been taking staff out of there. We know that they're making headcount cuts across the United States, Canada, Costa Rica, which I hadn't realized they were so prevalent there, Matt. When, though, we start to see this focus on profitability, basically making those sorts of cuts, where are we going to see a driving force of growth, or do we have to hold and wait? Because retail sales, it looks as though the consumer's strong right now, according to macro data.
That's right. And if you go back to the holiday quarter, Amazon retail sales held up okay. And I think investors have been a little bit patient, waiting for that the benefits of those cuts to come down the pike. But we're at a year here since Amazon said, you go back this quarter a year ago. They said we've got too many warehouses, too many people, and it was sort of the first, flashing warning sign that something was up, and they were going to have to start rationalizing across the business. They've been working at that for a year now, so I'd expect to hear some hard questions for management on when that's going to translate to improved margins this year.
What are the fun things we want to look for, Matt? Are we going to hear anything about artificial intelligence?
I suspect we do. Amazon jumped into the generative intelligence race just this month, announcing that they had their own set of models designed to go head-to-head with OpenAI's ChatGPT and friends. They say their approach is a little bit different. I'd expect we hear a good deal about that. It was also a feature of CEO Andy Jassy's letter to shareholders earlier this month. And I'm personally curious if Andy Jassy shows up again on the conference call. Jeff Bezos decided to basically not speak to analysts for the last decade plus of his tenure running the company. Andy Jassy surprised everybody by showing up last quarter. Are we going to hear from the boss again?
They've been doing AI for decades, as they keep trying to remind us. Matt Day, really great to have that look ahead with you. We thank you so much. It's going to be a busy day. Meanwhile, coming up, we bring you our interview with Activision Blizzard CEO Bobby Kotick. Ed did a great job with that. This is Bloomberg.
Story of the week, UK Competition and Markets Authority blocking Microsoft's $69 billion takeover of Activision Blizzard. But CEO Bobby Kotick says the deal will prevail. Have a listen.
It clearly is an irrational conclusion. And I think we have every expectation, as does Microsoft, that we should prevail in an appeal with the tribunal. We're very fortunate. You saw our first quarter earnings. Our employees continue to be very focused and engaged in delivering great games for our players around the world. We had net bookings up 25%. Our GAAP earnings were up over 70%. And so business is strong. And I think we're going to continue to focus with resolve on the remaining countries that we are securing approvals from. And we think the appeals process will work in our favor.
Bobby, that is the question. I look at the earnings statement across titles and franchises. Strong. So if earnings are so strong and the growth story is still there, why does Activision need to be bought by Microsoft?
Well, 98%, I think, of our shareholders approved our transaction. And I think that one of the things you realize is that there are an increasingly larger number of competitors, whether it's Google or Apple or Netflix or Tencent or NetEase or Alibaba or Nintendo or Sony. There's so many companies now that are competing in our industry. And one of the nice things about a combination with us and Microsoft that historically has been an enterprise-focused company is we're hopeful that we'll be able to attract some of the great AI and machine learning talent, data analytics, UI and UX talent. There's a enormous amount of great talent at Microsoft that if we were able to have access to, would allow us to grow even better. And the wars for talent have continued to be really, really challenging, especially in areas like AI, where everybody is looking for what is a dearth of talent.
Again, across titles and franchises, there was strength. You know, what caught my eye, Bobby, was King and Candy Crush continuing to grow. How does King fit into the relationship with Microsoft? How do you see that impacting Microsoft's ambitions around mobile gaming? But also, I guess when it comes to King, their ambitions for a mobile gaming store.
So I think that the King is actually a great example of the irrational conclusion that the CMA reached. Microsoft isn't in the mobile gaming business, and this gives them, with Candy Crush, a single title that gives them an opportunity to actually participate in the mobile market. And one of the things that you would expect is that since King is actually headquartered in the UK, the UK would be welcoming and supportive and enthusiastic of a business that is based in its own country. But the opportunity that we have with Microsoft is to give them more access to mobile talent, mobile technology, and that's something that they saw as incredibly valuable. And the thing I think that was very misunderstood by the CMA is that they were focused on the console gaming market, which Sony has roughly 80% market share in, rather than where the global market has gone, and that's to mobile gaming.
Activision Blizzard CEO Bobby Kotick. The point is, Carrie, that in the UK there's a judicial review process, but all the judge can do is look at the CMA action and see if they acted in a way that was irrational or was procedurally incorrect. They can't actually look at the market merits.
And this is what makes them so important. I think one academic really talking about how post-Brexit, the CMA is really decisively making itself a clear competition enforcer here. I mean, Sarah Cardle over there talking about preventing entrenched market power that then stops and prevents competition overall. There is this tension, though, isn't there, that the UK is in some way stifling innovation. But notable from what, not one, but like, there are now, 3 female leaders of these competition commissions in the EU, in the US, and the UK, and they're all going to be looking at this really toughly.
So in the context of the UK as well, the CMA was really focused on cloud gaming. And I asked Bobby about that, and he said it's an inconsequential part of the business, which is fascinating because Microsoft's going really big on cloud gaming, transitioning Xbox from console to cloud. Well, Bobby thinks it's inconsequential. That was a bit of a surprise, actually, coming out of that interview. And that seems to be the focus of the CMA, thinking that is a real driver of innovation and might be stifled. And it was a brilliant interview. Thank you for bringing it to us. Meanwhile, coming up, well, we're going to talk a little bit about the tension that's going on within Silicon Valley and really break down some of the biggest stories over there and beyond. We want to be talking about, in particular, Dropbox. Some of the concerns around layoffs, 16% of the workforce likely to be cut. This is in part due to natural maturation of the existing businesses, so says Drew Houston, but also AI. He needs to hire up, beef up in that particular part of the business. We're down 2%. This is Bloomberg. Time for Talking Tech. Germany in talks to limit the export of chemicals to China that are used to manufacture semiconductors. The proposal, part of a package of measures that Chancellor Olaf Scholz's government is discussing that would cut off China's access to goods and services needed for the production of advanced semiconductors. Apple and Oppo are battling it out to be the top smartphone maker in China. In the first quarter, Shenzhen-based Oppo saw the biggest share of shipments, with Apple's iPhone following close behind. That's according to IDC's latest figures. Competition is intensifying as the country's market contracts and remains weak. And Elon Musk's bid to dominate global car making is taking a new turn and dividing opinions. Tesla's cut prices a half dozen times already this year, with Musk betting his competitors will have little choice but to respond to the price cuts. But the question is this disruption or is it desperation? For more, let's bring in Bloomberg's automotive czar, Craig Trudell, who authored that Bloomberg Big Take. You and I have been looking at this chart for a while, a downward trend on prices, but you have to look at another chart, Craig, which is the downward trend on margins as well.
Yeah, absolutely. And I think, Elon Musk, to his credit, said this was going to happen, right? I go back to the end of last year. There was a Twitter Spaces he did where he sort of talked about his view that the economy was going to get tougher, that we were headed for challenges, that interest rates were making it really difficult for people to make big ticket purchases. And he said, look, I'm willing to give up margin for volume, and I'm willing to, basically go to not making any money or making very little money if it means growing. And I think what's been surprising for people is just how much they've had to cut and how quickly. And also, I think the demand response. I don't think the pop has really been there, and there's concerns about mounting inventory for Tesla, and just sort of how productive these cuts have been.
What's kind of amazing is the ripple effects this have on so many more. Just thinking of Mobileye, which is a stock that, Ed, you brought up at the beginning of the show, down more than 20% because of the impact on the Chinese EV market these price cuts are having. Craig, how much is this going to be a global story of trying to reach for basically sales over margin? And do we think that really they can preserve a luxury brand when they do this?
I think it's interesting, and it's been kind of patchy. I think where we've seen the most intense competition on price has absolutely been on China, which you touched on. Here in Europe, we're seeing really, more so the case that there's a long sort of order bank for a lot of these companies. They've been able to keep pricing strong for the time being. Demand has been quite good the last few months. The question is how long that will last. And I think in the U.S., too, it's a little patchy where in some segments where Tesla doesn't play, you've not necessarily seen responses from other companies of them feeling the pressure to need to match Tesla. In other respects, you do see some moves. And so within Ford's own lineup, for example, the F-150 Lightning, you've actually seen them take the pricing for that up. With the Mustang Mach-E, however, which goes right up against the Model Y, you've seen them have to cut. So it's really dependent.
Craig, we want to thank you so much, Craig Trudell. Really deep look at what's happening over with Tesla, and please do go and read that big take or listen to it. We have a podcast around it. Meanwhile, well, let's stick with Elon Musk because he may be supporting certain celebrities to be verified on Twitter, but other prominent players are actually paying for Twitter Blue as well. We're going to have a deep dive into what 776 founder and Reddit co-founder Alexis Ohanian has to say about the infamous blue check. Just take a listen ahead of that.
Yes, I am guilty of paying for it, but like I said, it was a business decision, and frankly, it's more valuable to me to have everyone on our team with that blue check mark, because I think they're special. They deserve it.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. Oh, sorry, Caroline. Check out the markets. Go ahead.
I almost cut you off. Let's check out these markets for a moment, because actually we are still seeing such resilience in big tech. It's all about those earnings. The mood music turning more positive there, even though the macro picture from the GDP figure for Q1 not looking so resilient. Nasdaq 100 up more than 2%. So really second day of gains here. Interestingly, chips not playing into this, and we're more worried perhaps about some of the smaller chip names that have been giving us earnings that look to the downside. And look, Nvidia is a bit of a drag there on the day as well. But I did want to shine a light on what's happening in other risk assets, and the volatility is back when it comes to the OG of Bitcoin. We're seeing it bouncing around, sell-off. It's all about thin liquidity at the moment, but nevertheless, we're back near that $30,000 level after a recent sell-off. Spinning on, I want to look at some of the individual movers, because we have had tech earnings thick and fast. Don't forget some of them. eBay actually up more than 4%. Resiliency in some of those collectibles areas. Remember, this is a company that's really trying to stabilize its revenue post-COVID era, and looks as though we're doing well from Jamie We're seeing Roku also up more than 3%. Stabilization, the watchword there as well in terms of its revenue. Intel, we wait with bated breath as to how this chip maker does after the bell. And actually, it's shrugging off the rest of the weakness in its sector. We're seeing Intel outperform as we hope that the worst is behind us. Lastly, I mean, it's the story of the day. Meta up more than 14% after the ride it's already had so far this year, Ed. Quite phenomenal. People really taking away hope that we're turning a corner in terms of advertising spend at that particular company.
Forget the numbers, the story, generative AI. And we were at the RSA Cybersecurity Conference yesterday in San Francisco. Guess what was top of mind for everyone? Generative AI. This is what some of our guests had to say. Have a listen.
AI is going to be a game changer.
Generative AI has been something that we've really focused on for a long time.
When you think about generative AI and how it can be used in security, it can really help in automation.
That's where AI is going to really augment that human essence.
You're going to see some of the most rapid advances where security challenges that were very hard, like great identity security, suddenly we go, wow.
Right.
We're great at it now.
I think there are a lot of people that are actually concerned about the growth of AI and what the downsides could be from all different standpoints, from ethical to also, you know, the potential for what does AI mean for cybersecurity.
What's really important is that we're having that conversation up front as we start to really understand the technologies and how we can take advantage of it.
Let's get into it. Wrap up everything that's being talked about at RSA conference with Wendy Whitmore, Senior Vice President for Unit 42 at Palo Alto Networks. Quite a lot of that was in abstract. Generative AI, generative AI. Let's get technical. When we consider the network infrastructure required for cybersecurity, the software tools, why is everyone so excited about this new era of technology?
Well, first of all, what a great recap from, so many industry leaders, right? But specifically focus while we're here at RSA on generative AI. So when you talk about the technology piece, you're going to hear many of us saying the same thing, which is that we've had machine learning and AI embedded in our products and tools for a long time. The generative piece, as someone for me who responds to attacks on a daily basis, I'm most concerned about the immediate impacts that has on the attacker's ability to conduct much more effective socially engineering attacks, right? We're going to see much more sophistication coming from them. And you've already seen that over the course of the past year with cyber criminals really getting in the game in an effective way. So generally, technology fuels the offense a bit more faster than it's going to fuel the defense. But I think we also feel very well prepared on the defensive side.
We heard from Jaya Balu of Rapid7. She also sits on a number of technical boards in Europe, right, from a regulatory perspective. And she made the point that she's really worried about quantum computing and machine learning from the threat actor's perspective. Your industry has all these tools, but so do those you're trying to combat.
Absolutely. I mean, when we talk about espionage, right, we're talking about cyber espionage. That's the world that we live in. And you're always going to have that cat and mouse game. So it's a matter of technology companies making the right investments in next generation technologies to effectively combat those attacks.
Let's talk about your investment and some of what you're unveiling at the moment, Wendy, because I was reading with interest the Forensics and Incident Response Service. Basically, you're using artificial intelligence to help companies, enterprises react faster. How?
Yeah, so thanks, Caroline. So Unit 42 has expanded throughout the globe over the course of the past year. We've got offices in EMEA, in Asia Pacific, and we're seeing clients from all over the globe have these same kind of questions, right? How can we use AI to further enhance these type of services? So we're absolutely integrating AI into these tasks that we can automate, right? Make less manual, less human-driven, enable our humans on our team to be able to move faster, to answer the questions that are the most challenging, and let machines do a lot of the automation behind that.
Does that mean you need less firepower, less talent internally at Palo Alto Networks? How much can you end up outsourcing the work you do to computers, to AI?
It doesn't, which is great in terms of needing continued need to employ a lot of people. But on the challenging side, right, we all know there's a skills shortage in our industry in particular. So what we're really doing is enabling the machines to take care of tasks that will allow us to focus our team members on the much more sophisticated components of it, which means we can solve cases faster, we can give better service to our clients.
And also, this is such a global conversation, isn't it? I mean, goodness, we're all talking about, we're going to delve into a little bit later, but a prank call between Russia and the US at the moment. But I want to dig in a little bit more on how global and how big an expansion this is.
Well, one thing that really caught me by surprise was across all of the conversations we had on air and in the corridors, everyone went hard on China straight off the bat without prompt. And Wendy, I want to understand why. I mean, is it just simply that as geopolitical tensions have ramped up, so have the threats? I don't understand the link.
So, great question. So certainly over the course of the last year, I think the world's been focused on Russia and Ukraine. And in the background, we have seen Chinese nation-state actors, and we're tracking over 30 of these groups specific to China alone. Our telemetry coming in from a global perspective and really showing that they're continuing to march forward from an espionage campaign, pre-positioning, reconnaissance, all of the types of activity that they've done for some time, but I think they're more aggressive than they've ever been before, and they're really able to do it under the veil of distraction, while the world's focused on so many other major issues.
Fascinating. Wendy Whitmore, we thank you so much, keeping that cyber conversation front and center. Senior Vice President for Unit 42 at Palo Alto Networks. We thank her. Meanwhile, beyond RSA, generative AI is also top of mind for someone else. Alexis Ohanian, 776 founder, general partner, and of course, co-founder of Reddit. He talked about why generative AI makes him excited, but also pretty anxious too. Take a listen.
It is a game changer, and certainly I do feel somewhat responsible given that Reddit provides a lot of the training data that's made, OpenAI possible and these other platforms. I'm excited. I have never been more exhilarated, right? I started in tech in 2005, so in almost 2 decades, I've never woken up every morning more excited than I am right now because of this technology. With that, I'm also more anxious than ever, not just about the potential downsides, of which there are, but also because it is an existential crisis for every business to understand how this technology, how this breakthrough is going to change the way that they work. We think about it within our own venture firm, 776. We think about it across our entire portfolio. And like I said, it's exhilarating, causing me to have a lot less sleep these days. But I do feel it's transformational, and this is a trend that is important for everyone to pay attention to.
Go back to the anxiety a little bit and the data that it's being fed off, in particular, using Reddit, for example. Do we think regulation's the answer there? Do you think it's self-regulation? You think about a lot about that across various parts of the tech ecosystem.
Yeah, okay, I want to use lowercase r regulation, which I do think is important. The problem for me is intellectually, I think this makes sense, to give rules of the road, to figure out a process, because look, these breakthroughs are happening literally week to week.
Yeah.
The part that gives me pause is I've seen enough meetings down at the Senate interviewing, heads of, pick your favorite social network, where folks were so ill-equipped they didn't even know the business model of Facebook. Remember that infamous Senate meeting? My concern is the very people who should be at the forefront of understanding this technology in order to figure out how we could properly create those rules of the road are among the least informed. And so that gap is what worries me, because I do think it's important to create some structure. I think it's also important to make sure this industry continues to evolve here in America, because we know that counterparts, for instance, in China, they're going to triple, quadruple down on this technology as well. So I think it is important for us to keep making progress here in the States as quickly as possible. And at the same time, it is so important for our elected officials to get as smart as possible, as fast as possible, because a ham-fisted, a poor decision here could have some pretty serious repercussions in terms of our global competitiveness, but also in terms of hamstringing what could be very transformationally good technology. This is not a small feat.
776 general partner, Reddit co-founder Alexis Ohanian. So much more of that interview online. Ed.
Yep, well, I think we'll stick with venture, right? We're going to go over to Miami and look at the tech scene out on the East Coast. What sectors, other than crypto, have seen momentum there? Founders Fund, Keith Raboy. Goodness, Cara, we've been looking forward to this one. I want to take a look at shares of First Republic, largely because, this is a non-drama day in the scheme of things, at least in terms of an upside move. Where we stand is the bank's rivals that have kind of stepped in to help it, and the US government are playing this game of chicken. And there's a fantastic story on the Bloomberg terminal about who is going to step in and when, but we're really worried about the banking sector. The question is whether the worst of it is over. Remember, loads of VCs and startup founders, they looked to First Republic when SVB fell apart. We got that story. This is Bloomberg.
Now, in today's VC Spotlight, we take a look at the Miami VC scene, as many of you descended on the city for Miami Tech Week. And while Miami, look, it's not at the level of the biggest hubs yet of New York or Silicon Valley, but at the moment, the Bay Area, for example, that share of deal count keeps on falling below 20% for a third consecutive quarter, according to PitchBook. Is this the opportunity for the Florida city? Let's bring in Keith Raboy, Founders Fund General Partner, for your read on this. And Keith, I set you up there because I'm sure you're going to say, wow, 2022 was really the year for Miami. But Q1, we saw VC funding slip a lot. What do you make of the trends?
I don't look at it quarter-by-quarter numbers. Over the year, this year, companies in Miami are going to raise a ton of money. There's phenomenal companies here. We're 5 for 5. Of all the 5 major investments we've made in Miami, they're all doing phenomenally well. The rough ratio in the Bay Area would be 15% are doing well. So it's 4x better, at least, maybe 5x, 6x better. So I'm not worried. I don't really care about the averages either. This is a power law business. We have the right companies doing the right things with the right amount of capital here in Miami.
Okay, Keith, so you don't look at the data quarter by quarter. Do you recognize the opportunity as a VC in Miami, the East Coast, moving at a different speed to what's happening here in the Bay Area? Is innovation moving at different paces? Why is it attractive to you, in short?
Well, I think the future of tech is the confluence of pop culture, design, and technology, and Miami's the epicenter of that. We have the best city in the United States for art. We are the epicenter of pop culture in the United States, as the Financial Times recognized. And we have technology now over the last 2 to 3 years. The combination is the future. Tech is eating the world, eating software first, but it's going to eat culture. And you're seeing that right now play out through things like TikTok, et cetera. But the future of that blend is in Miami. The people who lead in entertainment, the people who lead in music, the people who lead in athletics are all based in Florida.
Caroline, in the conversations you and I have been having for the last 6 months or so, when we think about Miami, we think crypto. That's where our head's been at until this point.
You mentioned that art focus, and that sort of became an NFT focus. But we know that the floor was tugged beneath that to a large extent. Was it too dependent on crypto?
Well, it never was for us. None of the companies I've funded in Miami, none of the companies Founders Fund has funded in Miami were crypto-based. So we never thought of it as a crypto or NFT-based phenom in Florida or in Miami. I know the media sometimes likes to write about that. We've taken 10% of our Founders Fund 7 and invested into Miami, which is up from literally 0, the fund before. And I only moved here halfway through that fund cycle. So it underestimates massively the percentage of investments that are in Miami. To put that in some contrast, New York was 15% Founders Fund 7, and the Bay Area was about 28%. So, which is down from 55% the fund before. So the Bay Area slashed in half. Miami's 0 to 10. Founders Fund 8, which is going to start pretty soon, almost surely will have Miami funded at the same rate as New York.
Interesting.
Yeah, that's a pretty good portfolio there.
Yeah, we're shining a light on it. Where's the AI is my question, Ed, and I'm sure you're going to go there.
Keith, I talk to your industry colleagues all the time, and what I'm finding most interesting is venture capitalists want to put capital into startups in the field of AI that are technologically trying to solve problems that have not been solved. They're not looking to the open AIs or the growth stage names. They want to see what's at the cutting edge. And we just want to know where your head is at with AI in that respect.
Well, the role of a venture capitalist is to produce significant returns on a low dose of capital. And that's impossible to achieve by investing in large entities. So, a VC is going to have a bias against investing in large entities. Even if large entities do capture all the value, we can't earn our money. We can't distribute money to our LPs by investing in late-stage public companies. That said, I actually think the future will be based on products and value propositions, not technology. So to me, the key is what consumer value proposition you're creating that's unique and differentiated. And AI is the magic wand that might enable you to do something that was physically or metaphysically impossible or economically impossible before. But I don't really care whether you're using AI or some other technology. I care what are you delivering to what set of customers and how delighted are they going to be.
What about your customers at OpenStore? Because you're not just a VC, you're also a CEO running a business. This is about basically automating for people who are selling through Shopify. Is that artificial intelligence led at the moment?
No, it's not. So what we do at OpenStore is we provide long-tail Shopify businesses, think $1 to $10 million in sales, and there's a lot of those 2 million Shopify businesses that don't have infinite sales. We give them liquidity. We offer them liquidity, peace of mind. So they built a brand, they built a business, but they don't want to run it for 40 years. They're stressed out. So we'll take that business and give them an offer in 24 hours. We also have a second product now where we'll agree to run their business for a year and guarantee them the cash flows. So if they don't want to sell their baby, this proverbial baby that they built, we'll run the business and guarantee them the money, and we'll run the business and drive it for them. So we do both. And then we stitch these businesses together into one decentralized department store that'll be shipping to consumers later this month.
Keith, your colleague, Peter Thiel, has signaled he's not going to be as sort of politically active going into 2024. What do you make of that?
Well, I think Peter, has to prioritize his time and what's most important for him. So he has a lot of things he does, including, investing in technology companies very successfully. So he needs to think about, what's the best resource, what's the best time return on his time. I don't know what the answer is, but I'm sure that's part of the calculation.
All right, Keith Raboy, Founders Fund General Partner. He's got to run, Caroline, because he's going to be teaching a Barry's class very soon, I believe. It's good to catch up with you. Thank you for your time. Now, coming up, going viral, how Russian pranksters were able to hop on the phone with Fed Chair Jay Powell. We'll bring you the details. This is Bloomberg. In today's Going Viral, have you seen this one? Federal Reserve Chairman Jerome Powell held a call with a pair of Russian pranksters posing as Ukrainian President Volodymyr Zelensky. That's according to a video shown on Russian state television. Let's bring in Bloomberg's Kaylee Lyons out in D.C. What's so astonishing about this is that the call took place in January.
Yeah, no, and it's just kind of making the rounds on Russian media and then U.S. media by extension today. Now, these two pranksters, known as Vivon and Lexus, nicknames, apparently were impersonating Zelensky, and Chairman Powell, in thinking he was speaking with Zelensky, spoke with them about a number of subjects, including inflation and the Russian central bank. Now, the Fed today is saying that it is unclear if the video is edited. It appears to be. It could not confirm that it is accurate, and said in a statement that Chair Powell participated in a conversation in January with someone who misrepresented himself as the Ukrainian president. It was a friendly conversation and took place in a context of our standing and support of the Ukrainian people in this challenging time. No sensitive or confidential information was discussed, and added that this matter has now been referred to the appropriate law enforcement. But still, guys, this raises some pretty big questions about security at the Fed, considering these two were known. They have done this with global leaders before, and yet they still were able to get through to the chairman.
Precisely. And so will there be ripple effects? Will there be action further to saying we can't talk about the veracity, authenticness of some of the videos, at least, that are circulating?
Well, we'll see where law enforcement takes this. The Fed basically left it at, we've given it over to them. We're not going to comment on it any further. But this has really been something that has gone on for years. And earlier this year, we saw something similar with ECB President Christine Lagarde, who also was apparently pranked by these two posing to be as Volodymyr Zelensky. So it also raises questions about what more largely can be done in terms of security in order to put a stop to these two impersonating their way into these conversations with global leaders. But this is just something we have to think about in the age of deep fakes and AI and the ability to manipulate information and how it's perceived on the internet. Clearly, central banks and governments around the world have to be paying attention.
Yeah, I mean, to talk about AI and then go back to something that's so deeply 90s in terms of prank calling, Kaylee Lyons, bringing us a little bit of levity, but I mean, this is serious, particularly amid the geopolitical backdrop. We thank you. Meanwhile, that does it for this edition of Bloomberg Technology. Ed, join us tomorrow. We've got a really important conversation. Darren Walker, president of the Ford Foundation, is going to be joining us on Guess What? the rise in popularity of artificial intelligence. You don't want to miss it.
Yeah, 4 days into a mega week for tech earnings. Remember, Amazon and Intel after the bell. So much to recap. So listen to our podcast, wherever you get your podcasts, of course, on Bloomberg platforms, but also Apple, Spotify, iHeart. Gosh, Caroline, 4 days. It's been intense. One more to go. We got this. This is Bloomberg.